Good evening, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And I had a special request to do a video on a trade that I called out this morning, and it could help a lot of traders out, so we decided to go ahead and do a video. And let's go ahead and look at it. We traded the SPX most of the day today, or at least I did. Others traded the SPY. You can trade them more or less symmetrical with each other at the same time. So this is my little Twitter page. There's a link down below this video where you can link right up to it, subscribe, and get to know me on my little X alerts. And this is the chart right here, and I'm going to describe how I'd call a breakout on a snake pattern. Like I said, I'm the sneaky snake trader where I talk about chart patterns, moving averages, and being in the now. So I'm going to show you what a falling wedge is and what a symmetrical flag is. So right here, first thing in the morning, I like to draw out these what I call snakes. They're a pattern. So I go to my tools up here on toss, think or swim, and I start in with the first breakout right there, and I extend it on out, and I just go ahead and bring it on down from that next candle breakout. And then I go to the bottom of the flag. So that's what I call a snake. And I talk about 1, 2, 3. Every pattern has a special sweet spot, just like on a baseball bat. So if you can count to 3, you can trade with me. So right here this morning, we had this sell-off. I had to go out and see my mechanic, and when I got back, we were set up just the perfect time. I came back just right at the perfect time, and I went straight to the SPX, and that was right around 10:30, right about in here. And I said, man, it looks to me like a nice little setup setting up here, because we already broke out of the channel. If you count to 3, you can trade with me. So we had one touch right here in that flag, then we had another touch right here in that flag, and then we had the third, and the third one was a breakout. So I never tell anybody to take the trade at the initial breakout of that flag, just to wait, relax, and take your time. Also, we had like a little fallen wedge right here. That's the flag right there, that's the snake. But also, if you take a trend line, from right there to right there, you got what you call a little fallen wedge. You can see the wedge right there. And then we had the breakout of the wedge. Well, every time you have one of these breakouts, they like to pull back. And then we had a double bottom. And then I was about here when I told the room, I said, looks to me like we might have another little wedge pattern, a symmetrical flag. So I draw that trend line from the top of the body of that candle to this next flag right here. And I put that in there. Then I go from the bottom of this here body of this candle, and I hit the body of that one, and I just bring it on straight out, not using the wicks. So now we've got what you call a symmetrical flag. So a fallen wedge is a bullish pattern. That's one of my favorite patterns when it breaks out. You can see on a lot of these diagrams what a falling wedge can do. It usually, when they fall, they have a nice little breakout, almost every one of them. You got the snake coming down, then it forms a wedge and it breaks out. You got the trend line coming down, it forms a wedge and it breaks out. This one's coming up from an uptrend. Creates a bull flag, creates a wedge, fallen wedge, and it breaks out to the resistance line of the double top. I like to go to the images, and I also like to read about what kind of pattern it is. It's called a falling wedge pattern. Almost every one of them. You're coming down from a downtrend, it breaks out of that pattern, and then you have what you call a fallen wedge. And every fallen wedge has a sweet spot right around 3 or 4. And every time you touch it, like here, the 4th time, and we touched down the fourth time, and that was the sweet spot. It goes anything after that 4, it starts to get a little bit worrisome. But the flag, the wedge, here's one going up, and it has a rising wedge, and this is a falling wedge. Most falling wedges are bullish. Same as a few rising wedges too. They depends on what kind of trend the market is, or where are you in part of the day, or if any bad news comes in, it can automatically drop on you on falling wedges. Same thing as any kind of pattern. So we've got the fallen wedge, all kinds of them. Just Google falling wedge, bullish and bearish, and you can get that kind of idea. And then you got the symmetrical flag. A bullish symmetrical flag chart pattern refers to technical analysis patterns, which is price consolidation within a symmetrical flag, just like an ordinary flag going straight out. They're wedges, but they're flags. They're symmetrical, following a strong upward trend, indicating a potential pause before the price resumes an upward movement. Same as if it's going in a downward trend. A continuation pattern that forms when the price consolidates in a downward slope, which would be more or less you have the downward slope, and then the flag starts to create itself. So you go to images and you can get some kind of idea and type in bullish, bearish, symmetrical flags. Most of them, when they're coming up, they like to break out. Some of them, when they're going down, they like to break down. But it depends on where you are in the market. How bad has the sell-off been? It's forming a flag, so it could be a possible breakout. So here we are. We have the snake, and when we have the initial breakout, and we start to count. Let's take our little circle again. We got 1, 2, 3, and then 4. We got 1. Now this is a symmetrical flag coming out of a falling wedge, or just a regular old snake, which snake is a downtrend, vertical downtrend. 3. So you know that right in here is a sweet spot. It hit the third time down, and we're at number 4. So if you can count to 3, you can trade with me, and if you can count to 4, you might make a little bit more. So she goes ahead, and I call this trade out, and I jump in the trade here at the 3, because I figured it was going to start to move up and break out. And then she breaks out, and she runs up and hits the 200 SMA and the 200 EMA. And then the final resistance would be right there at that opening price. So you draw your little price line if you want to go ahead, and it breaks out. See, once it hit this 200, it broke out, and then it came back and kind of had a little flag here, another little bull flag. Then she broke out again. Then you had another snake and another breakout, triple top breakout. So I was going to draw a price line. So your resistance level, I called this resistance out right about in here. And that was that previous right when we opened up, right at the market. So we broke out of that symmetrical flag, and she run up, and then she started to consolidate and broke out of the 200. Once it started breaking out of this triple top right here, take and draw a little price line all the way across. 1, 2, 3, she broke out, came back and retested the 21 EMA, and by this time we already had the crossover of the 9 over the 21, and it started respecting that 9 all the way up. So we had another flag right here, and she broke the 200, and she kept running on up. So that was that opening price right there. You see where it stopped. It stopped right at that opening price. Whoops. Well, it came down here and broke out of that 200, and then she finally came up and broke out of that and hit that opening price right there. the day high. So that could have been the final exit idea for your trade. You were consolidated here, then we had a breakout, and it consolidated here, and we had another breakout to a double top, almost a triple top right there at opening, and that would have been a good exit idea. So again, let's kind of rehearse this trade, and then by the end of the day, you see where it went. It had another breakout to yesterday's close, which was right here. That would have been your other resistance level. Right there at that yesterday's close. And that's about where she started turning down. And then that trade I called a put. It was a paper trade. One of my worst ideas I've ever took. I called it a paper trade put, and that puts went from $135 all the way to $65. They were worth $6,500 a contract by the end of the day. And that's the way the market's been doing. They break out and then they pull back. All because of these Trump tariffs. The market's worried about it. I think it just gives us plenty of opportunity if you're a day trader and a scalper and you don't really swing stocks. I got into NVIDIA and swung it and got out of it a little bit today too. I had it yesterday and it was down today, but not really hurt that bad. So I was kind of pleased once I jumped up 50 cents. I took a little profit off the table. So we had this here resistance level and got out right there. So let's kind of make a little summary of this trade. Again, this is called a snake or a falling wedge. And if you can count to 3, you can trade with me. The falling wedge broke out on the third trip and then broke out, came back and pulled back to a double bottom. Then we had a triple bottom by the end of the day. And that 1, 2, 3 was set up for it to break out with the 1, 2, 3, 4, which is a sweet spot. Somewhere in here, it would have been here, or it definitely would have been right in here. And if it didn't break out here, we could have had more damage. The thing could have dropped down more. But it broke out of that sweet spot. And you can jump in the trade, just don't chase it. Let it pull back a little bit to where you can get a better price, and then run it up and get out of it at the 200 SMA, 200 EMA. Or get out at the day is open. But you never know. You want to take that profit when you can. And she did pull back again, almost hit the 200, and it ran up for the rest of the day and had a couple little pullbacks. And I was calling these trades out every time they pulled back. They'd either hit one of my moving averages, like the 200 EMA here, or it hit the 50 SMA, and it respected the 9 and 21 all the way up. And then finally, that double top. So I went ahead and I called the put. I called the put right at the exact spot up here. It was amazing. This is called a tweezer top. So you want to look at them candles, see what kind of, reversal candle you see. Well, this was a tweezer top. So I called this trade out. I jumped in it at 135. It dipped down to 120, and then by the end of the day, it was down at $65 a piece. And I had 10 of I paper traded this son of a gun. And I just sat there and watched it go down. By that time, I was pretty well exhausted. I had my limit of 7 trades in, and I just didn't want to blow that. It was a perfect day at Coco K. So, Google, anytime you see a chart pattern, Google them chart patterns and learn them. Learn them. Fallen wedge, symmetrical flags. Those are some of the most popular ones. Inverse head and shoulders. You got a head and shoulders when to get out of a trade. Double bottom, triple bottom. So that's it. That's the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Now have a great day.